For any investor, Berkshire, led by Warren Buffett, is a symbol of stability and long term growth in a volatile market. So let's explore why I believe it is the most defensive mega cap. Hi, my name is Sunny, and a quick like share alongside smashing that like button will be highly appreciated. Berkshire is a holding company that owns multiple businesses across many diverse sectors. Its businesses are run more autonomously because of Berkshire's decentralized holding structure. Now, Berkshire's primary earning source is its partial or complete ownership or investments in major companies like Apple, Bank of America, Duracell, Tim Hortons, Geico, BNSF Railways, Heinz, etc. When they invest across diverse industries, that reduces sector specific downtime where it can allocate capital more efficiently. More capital is reinvested in the business, allowing it to compound even further as there is no dividend payout in Berkshire. Warren and Charlie Munger's leadership and skill in capital allocation are top notch. Their holdings are diverse not only in businesses but also in geographies. A significant source of very low capital is the float they generate from their insurance businesses like Geico. Warren's legendary patience and financial acumen enable him to acquire good assets during distressed valuations. Berkshire has investments in blue chip companies like Apple, Coca Cola, Bank of America, etc., which have multiplied manifold. Having a $320 billion cash on hand proves they have a fortress balance sheet. Consequently, the sheer size and the financial muscle that came with it allowed Warren to have extraordinary bargaining power during acquisitions when the times are distressed. There is no single entity that can compete with Berkshire as Warren has built over decades a unique blend of insurance and investments spread over multiple subsidiaries. They compete with big banks like JP Morgan Chase in capital allocation, with Vanguard and BlackRock in investment management, whereas Blackstone and other private equity firms compete for significant acquisitions. Geico also competes with many insurance companies, whereas Tesla and other big energy companies are in direct competition with Berkshire's utility businesses. Many ultra mega corporations like Apple, Amazon, and Microsoft surely overshadows Berkshire's market cap. But with over $320 billion cash in hand, they surely have a fortress balance sheet unlike others. The single most competitive advantage of Berkshire is its insurance float. This premium from insurance subsidiaries generates a consistent yet low cost capital flow for Berkshire to invest. Insurance premiums are collected now where claims are not to be paid immediately, allowing Berkshire to invest without incurring any external debt. Warren Buffett's expertise in efficiently allocating capital remains the cornerstone of Berkshire's success. Its stable insurance operations generate significant insurance float, making it the biggest moat for this vertically integrated capital compounding machine. Consequently, Warren can count on a regular flow of capital from insurance to investments, but he keeps a significant cash position for any future insurance claims. Historically, Berkshire stock has delivered better returns compared to the S&P 500. Warren invests basically on the intrinsic value of stocks. Such long-term investing reduces your costs and exponentially increases your returns. That is precisely how Berkshire benefits from dividends in the short term and appreciation in the long term. They always keep sizable cash positions, which enables them to buy good assets during market downtrends. Warren has always invested in businesses within his area of competence or the ones that he understands, and the magic of compounding happens over the time. Therefore, they are able to produce long-term returns that outpace those of the S&P 500. Unlike other mega caps, Warren has intentionally built Berkshire into a diverse group of decentralized operating companies that empower its leaders. He has an unparalleled track record of compounding invested capital over decades on top of this decentralized corporate structure. It combines the best of both worlds by design, a conglomerate with an investment firm structure within it. This corporate structure allows Berkshire continuous access to a low cost insurance float, enabling it to withstand economic downturns better than other mega caps. The key behind Berkshire is Warren's investment philosophy of being patient, disciplined, ethical, and visionary as he invests in assets in his area of competence. Warren surely is the most celebrated investor in our time. His long track record of compounding capital over decades, where the returns are better than the S&P 500, is not a small achievement. By investing at the right time, he enabled Berkshire to reach almost 1 trillion in market cap, starting from almost scratch. I believe that if you are a long-term investor and not a trader, Berkshire is one of the best stocks to hold forever. Sitting on billions of dollars in cash during good times and bad gives him the firepower to buy assets when the going gets tough. During the 2008 crisis, corporations like Bank of America, Citigroup, Goldman Sachs, etc., were calling for investments. You guessed it right, from Berkshire. As a disclaimer, I'm not a financial advisor. Please consult one before investing based on your personal financial situation, and don't forget to do your own due diligence. If you like the content that I make, please help me and my channel by liking, sharing, and subscribing to it. Thanks for watching, and see you in the next one.